Imagine a bakery that never buys ovens. It designs recipes, outsources baking to the best kitchens in town, then sells the finished pastries at a high markup. That's AMD's fabless model in a nutshell. The company spends heavily on design and R&D but doesn't own the billion-dollar factories that actually make the silicon. When demand ramps, that structure can turn a revenue surge into outsized profit growth, because most of the heavy fixed cost capex lives with the foundry, not the designer. CFO Gene Hu has been explicit about the implication: if revenue climbs faster than operating expenses, AMD should get operating leverage, and that means gross margin dollars, the actual dollars of gross profit, not only the percentage, can explode as deployments scale. Fables equals operating leverage? Walk me through the logic. Okay, here's the simple arithmetic that thrills finance people and terrifies risk managers. Fables design equals lower fixed capex. AMD doesn't carry the same manufacturing plants and their associated depreciation and staffing costs. That reduces the portion of fixed capital on AMD's balance sheet compared with an integrated device maker. Outsourcing fabrication to partners, mainly TSMC, means AMD's largest line items are R&D and SG&A, which, while big, scale more slowly relative to exponential revenue growth. Revenue rises. Fixed-ish cost base spreads. If AMD ramps shipments of high-margin data center components, the incremental revenue mostly falls to the bottom line after variable costs and foundry fees. In plain English, once you've designed a hit chip, every extra chip you sell tends to add a lot of profit dollars, assuming pricing and cost per die are healthy. Gross margin dollars, gross margin percent story. Management has emphasized that the goal isn't only to push up the percentage, it's to increase gross margin dollars, total dollars of gross profit, because that's what funds R&D, buybacks, and extra investments. Gene Hu's communications repeatedly stress that investing in the business doesn't mean letting OpEx run faster than revenue. The plan is to grow revenue faster than OpEx and thereby accelerate EPS expansion. That is basic operating leverage math. If you run a software-as-a-service business, once you build the product, the cost of serving an extra customer is small. Same idea. AMD builds complex designs once, and then sells many units without needing to maintain the foundry. Gene Hu's takeaway: bigger deployments mean more gross margin dollars, and faster EPS growth. CFO Gene Hu has been quite clear: as large AI/data center deployments roll out, the dollar amount of gross profit should grow meaningfully, pulling AMD's operating profitability closer to the level of the top incumbent in the space. That's an important phrasing. She's talking about absolute gross profit expansion, not just percentage gymnastics. Management's view is that the combination of EPYC CPUs, Instinct GPUs, and system/rack wins will create high-margin revenue that compounds as volume ramps and costs stabilize. If AMD's new chips become staples inside big cloud AI deployments, the company sells a ton of high-value units, and a lot of that revenue becomes profit, fast. By the way, if you are benefiting from the content so far and want more like this, like the video, it means much to me. Hit the subscribe button, turn on the notifications bell, and comment the word more. Just go ahead and type the word more so I know. Now that you have commented, let's continue. The math on the table. Can AMD really hit greater than 30% non-GAAP EPS CAGR for the next 3 years? Some analyst models and investor extrapolations point to very steep EPS growth trajectories for AMD. Numbers in the 30% plus non-GAAP EPS CAGR neighborhood for the next few years are being floated by bullish models and some forecasting services. These projections rely on a couple of big assumptions. Data center sales keep growing fast, high ASPs, strong unit growth, margin expansion as more revenue mixes into higher margin products and as fixed investments are spread over bigger sales, and OpEx discipline. Management keeps operating expenses growing slower than revenue. A few independent sites and analyst write-ups have modeled EPS growth in the low to mid-30% per annum range based on these assumptions. That kind of growth isn't a fantasy if AMD wins multiple, multi-GW scale customer deployments and converts headline wins into repeatable orders. But it's very sensitive to ramp timing, mix, and competition. If AMD's non-GAAP EPS is $1 today and grows at 32% a year, in 3 years it's roughly $2.20. Not trivial for a company that can also be re-rated if investors believe this growth is durable. Why the Fables model supercharges this, and what needs to go right. The Fables approach is the secret sauce here. It makes variable costs more predictable and reduces capex drag, so every incremental sale can drop more quickly to gross profit. But to realize that operating leverage, you still need sustained demand, hyperscalers buying lots of GPUs/CPUs, favorable ASPs and yields. If wafer yields are low or ASPs fall, gross dollars shrink, and supply chain discipline, test and packaging throughput, foundry allocations. If those three are in place, the runway to high EPS CAGR looks plausible. If any break, the math gets ugly. So the model's elegance is conditional, great if execution and market dynamics cooperate. It's like renting baking capacity instead of building an oven empire, cheaper, faster to scale, but you're trusting the baker next door to deliver and not burn your croissants. The other side, why AMD stock can still plunge spectacularly. Now for the mood killer. History shows AMD can get absolutely torched in market sell-offs. Investors should remember the stock's past roller coaster moments. 2018 correction. AMD suffered a major drawdown in 2018, dropping about 49% from a September high to a late December low in that correction window. That was a painful stretch, even though the company's secular story later resumed. Inflation/2022 shock. During the 2021 to 2022 market re-rating and inflation shock, AMD fell sharply. Studies measuring the peak to trough from late 2021 highs to October 2022 lows show a fall in the 65% range. That was brutal and a reminder that macro repricing can overwhelm company fundamentals. COVID sell-off. March 2020, the pandemic panic wiped out many gains and AMD's stock also plunged. AMD's peak-to-trough decline in the March 2020 crash was roughly 34% in many commonly cited windows. Markets were indiscriminate that month. Firm-level fundamentals mattered less than liquidity and panic. Point being, even firms with improving fundamentals and an exciting growth runway can see equity values crater when the market re-rates risk or liquidity evaporates. Note this as well. And he saith unto me, seal not the sayings of the prophecy of this book, for the time is at hand. He that is unjust, let him be unjust still, and he which is filthy, let him be filthy still, and he that is righteous, let him be righteous still, and he that is holy, let him be holy still. And behold, I come quickly, and my reward is with me, to give every man according as his work shall be. I am Alpha and Omega, the beginning and the end, the first and the last. Blessed are they that do his commandments, that they may have right to the tree of life, and may enter in through the gates into the city. Revelation 22 verses 10-14. If we fully obey the Lord, the Creator of heaven and earth, and carefully follow all his commandments, he has promised to set us high above all the nations of the earth. Deuteronomy 28. We shall be blessed when we come in and when we go out. I appeal to you to accept God and let him be your guide, for he will never leave you nor forsake you. Do not be afraid, do not be discouraged. Deuteronomy 31 verse 8. Want more information? Please check the description section. That's the end for now. If you have watched until the end, drop a comment like this: I stayed until the end. Just comment that I stayed until the end. When I see this comment, I will give you a heart. 3 more favors I request from you. First, like this video, subscribe and then turn on the notifications bell. If you do this, you greatly encourage me to continue bringing to you insightful content. Do not miss out on our future videos full of insight. All I am asking is your subscription. Thanks for joining us today. Your support means so much to us. Do not hesitate to share this video to help someone who may benefit. I recommend that you watch the next video, subscribe to the channel and share your thoughts about today's video. Wish you God's blessings and care. Faith and prayer will do what no power on earth can accomplish. See you in the next video by God's mercy.